Hello friends and welcome back to the another amazing live stream video. So tonight we are exploring a very important financial decision and the strategies. So we are diving to a topic that high earning W2 employees constantly ask about but rarely get any clear or human explanation for how do you actually reduce your tax bill when it feels like the every raise just pushes you into a higher tax bracket and every bonus gets chopped in half before it even hits your account. So the guys, truth is, the tax code isn't written in plain English. It's written in a way that rewards people who know where the hidden lanes are. So guys, tonight we are breaking down four most of the powerful legal IRS-approved strategies that high salary employees quietly can use every single year to bring their tax burden down, grow the hell smarter, and keep more of what they earn. And we are not doing this like a lecture. We are going to talk through these strategies like the real people trying to survive the tax system. Because if you are a high earner, you know exactly how painful it is when your paycheck looks nothing like the number you were promised, and most of them gets wiped out. And let's start by talking about the 401k because most people think of it as just a retirement checklist. But for a high income W2 earner, it's actually one of the cleanest, simplest, most powerful tax shelters available. When you max it out, you aren't just saving for the retirement, you are lowering the taxable income the IRS uses to decide how much of your salary they get to take. And if your company offers a matching, that's money being placed into your future tax free. It's literally the free income. And if you are one of those rare companies that allows the after tax contributions and mega backdoor Roth conversations, so that's where a high earner can quietly move tens of thousands of dollars into a tax free growth environment every single year. It's one of those strategies that separates the people who just work for their money from the people who let their money quietly work for them. But one of the most underrated tools in the entire tax world, and I mean across all the professionals, is the HSA. Yes, only people with the high deductible health plans qualify, but if you do, this thing is like a cheat code because it's the only account that is triple tax advantage. Most accounts give you one benefit, some give you two. The HSA gives you three. You don't pay tax when you pay money. You don't pay tax on the growth, and you don't pay tax when you take it out for the qualified medical expenses. Yes, guys. So here is the strategy that almost nobody thinks about. You don't actually have to use the HSA right away. You can pay for the medical stuff out of the pocket, let the HSA sit there growing for years or decades, and then reimburse yourself years later, which will be tax free for the things you paid long ago. It basically turns your medical budget into a stealed retirement account. So what else is needed, guys? So now for this strategy that surprises a lot of high earners because most people think real estate only benefits full-time investors. But there is one lane that actually works insanely well for the W2 workers, and that's a short-term rentals. Not long-term tenants, not flipping, not wholesaling. Specifically the short-term rentals where you actually qualify as a material participant. If you do it right way, and it has to be done properly, you can take the bonus depreciation on the property and use those losses to offset your W2 income. That means for the first time ever, your salary and real estate can finally work together instead of being trapped into two separate tax categories. And yes, the IRS rules are strict, and yes, you need to be a tax expert. But when this strategy is executed correctly, it's one of the few ways a high earning employee can legally shrink their tax bill without quitting their job or becoming a full time landlord. And finally, guys, the fourth strategy, if you make too much to contribute directly to a Roth IRA, that doesn't mean you are blocked out of the tax free growth world. High earners use something called the backdoor Roth, where you place your money into a traditional IRA and then convert it into a Roth shortly after. It's simple, it's legal, and it opens the door to tax free growth that isn't kept by the income limits. And when you combine this with a 401k, your HSA, and everything else we are talking about tonight, you start to see how wealthy employees build long term financial strength not by earning more, but by giving less away in the taxes and letting their money grow in the smarter places. So, guys, tonight this discussion isn't about the loopholes, it's about understanding that the tax system has rules and how you can save the tax legally. And the people who win financially are the ones who learn those rules early. These strategies don't replace the professional advice and they don't replace a tax expert, but they do show you the blueprint that many high income, basically W-2 earners, are following quietly year after year to actually lower their tax burden and increase their long term wealth. And once you understand the logic behind each strategy, lowering the taxable income, shifting money into tax free growth, or creating deductible losses from assets you own, you start seeing the taxes not as something that happens to you, but as something you can actually navigate with purpose. So, guys, stay with me tonight as we break down this further, answer question live, and talk about how you can use what you earn to build a future that actually stays in your hands instead of just disappearing into the IRS every April. So, guys, thank you so much for watching and being with me till the end. If you like this amazing breakdown and the strategies we discussed to save tax, kindly give it a thumbs up and also let me in the comments about your thoughts and what all strategies are you or what all options are you exploring to save on tax, and also subscribe to our channel for such amazing financial and daily political news. Thank you so much for watching. We'll see you guys in the next video.